What win rate do you actually need to pass a prop firm challenge? If you Google this, you probably get a bunch of vague answers. 50%, 60%, some will say 40% if your risk to reward is good enough. Nobody actually models it. So I did. I built a Monte Carlo simulation of my real live data. Real win rate, real expectancy. And I ran thousands of scenarios across different account sizes and different risk levels. And I did something that most challenge guides don't actually do. I added the cost of time, because the real question isn't, can I pass? It's, what does the path to funded actually cost me? What I found reverses what most traders are told. A safe way to pass a funded challenge isn't safe. It's the most expensive option by a factor of 5. Let me show you the math. All right, so before we get into the model, let's just talk about what a prop challenge is. It's a 10% profit target, 10% max drawdown, and 5% daily drawdown. 2 phases, usually 10% on phase 1 and 5% on phase 2. Now, most people treat funding challenges as a win rate problem. If I just win enough trades, I'll pass. But it's not. It's a business problem. And I'll show you why in a minute. But first, I want to talk about my inputs into this model. Now, I had a 38% win rate across 65 trades, with my expectancy per trade at just under 0.2 R and a trade frequency of about 1.5 positions per week. And this is real numbers from a real system that I've traded live. And I use this data across 10,000 simulated paths on different risk approaches to find out what actually happens. Okay, so I'm going to throw up a widget on the screen here. This is going to show you the pass rate at different risk levels. Now, you can see the green bars are obviously the pass rate, and the cold line is the weeks to funded. That's total weeks from starting your first challenge to holding a funded account, including failed attempts. You can see at 0.5% risk, the pass rate is 97%, basically a guarantee. And it sounds like the obvious answer, right? Trade small, pass almost, guaranteed. But look at the timeline, almost 20 months, nearly 2 years before you see a cent of funded capital. And the other extreme, at 2.5% risk, you're funded in about 13 weeks. Fast. But the pass rate collapses to 55%. You're failing half the time, paying multiple fees, restarting psychologically. And then you've got the middle zone, the 1 to 1.5%, which takes anywhere from 41 weeks to about 26 weeks. Looks like the sweet spot. And if you stopped here, you'd probably pick 1 to 1.5%. And most guides stop here, right? But we're missing half the equation. Prop firm match is the #1 place I go to for anything prop firm related, whether that's reviews, offers, spreads, payout, you name it. They cover everything about these firms. And we know how important it is when it comes to choosing the right firm. So check out the link in my bio for more information. Now here's the reframe that changes everything. Stop thinking about a challenge like a test and start thinking about it like a business. The challenge fee is your startup cost. The weeks you spend grinding through the challenge phase is pre-revenue. You're working, but not making any money. And the day you get funded is essentially the day your business opens. And every week after that is potential revenue. Any real business owner doesn't simply look at startup cost. They look at how long until revenue actually starts, because every week in the pre-revenue phase is lost income, and that's called opportunity cost. And that's the number that most people forget about. So let me put real numbers on it. A 100K funded account with my live stats running at 0.75% funded risk, which is kind of middle of the range for me, translates to about 170 USD per week take home after the 80-20 split. And this is obviously averages, so give or take depending on your funded risk, some weeks more, some weeks less, but 170 realistic. Okay, now let's run the cost matrix with that in mind. So now you can see on the screen, we have, again, another bar chart with challenge fees in blue, and then coal color, that orange color, is the opportunity cost. That's weeks in the challenge where you're going without income. Stacked together, you can see the true economic cost of getting funded at each risk level. If we look at 0.5% risk, the fees are tiny, but it takes you 87 weeks to get funded. Now that's lost income of nearly 15,000 USD. So the true cost of getting funded is over $15,000. Now look at 2.5% risk. Yes, the fees are higher, but you're only out of 13 weeks of lost income. So the true cost to get funded is only $3,200. Now the safe, conservative approach here costs you almost $12,000 more. Not because the fees are different, they're basically noise, but because time is worth more than any fees. Every week you delay being funded is a week you don't earn. And this completely flips the previous conclusion. If you're thinking like a business, the economic math says go aggressive. Now this answer really only runs true if you have an edge and you're able to execute consistently on that edge. So this is not a black and white answer here. The answer is simply choose the risk at which your real expectancy still holds, where you're still able to consistently execute on your edge and your model. And really the only person who can answer this question for you is you with your live data. Okay then, so let's go back to the original question. What win rate do you need to pass a funding challenge? And honestly, if you're above a 35% win rate with a 2R risk to reward, your win rate is almost irrelevant. What matters is 1, treat it like a business, fees plus opportunity cost, always both. And 2, understand that conservative isn't safe. It's the most expensive path on any real funded challenge. $12,000 isn't a rounding error. That's real money you're giving away by optimizing variables wrong. Number 3 is don't blindly go aggressive either. Find the highest risk level at which your data suggests. That's your personal optimum, and it sits somewhere in that guideline. And the 4th and final point is that you can't find this without data. Not hypothetical data, not what if I had a 55% win rate, your actual logged live expectancy, your actual trade frequency, and your actual stats under pressure. Otherwise, you're just guessing. So that's today's video. I hope you enjoyed it. And drop a comment. Let me know, what percentage risk are you running on challenges? And did you factor in the opportunity cost when you picked it? Subscribe if you want more trading content backed by actual numbers. See you in the next one.